good morning. Welcome back to the broadcast, Retirement Network. I'm Jeff Snyder. This is BRN AM for Monday, September 20th, 2021. And our top story today, concerns about getting the wrong personal finance advice on social media. Joining me now to discuss this and a lot more, George Grombacher is the Chief Community Officer with Money Alignment Academy. George, it's great to see you again. Thanks so much for joining us on the program this morning.
Thanks, as always, for having me.
George, this topic we're going to talk today about is, I think, one that in some ways I think it's positive, but in a lot of ways I think it's negative, and that is meme investing. And when I think of meme investing, I'm talking about GameStop, AMC, you lump in Robinhood, the gamification, if you will, of the investing process. So let's start. I know the SEC is looking into this, and we did a show last week with Dave Banerjee about the compliance aspects of this. But first, give me your reaction to watching all this meme stock hubbubaloo.
I think it's awesomely terrible or terribly awesome. So I think that we're cut from the same cloth there. So I'm 42. And when I was in my 20s, the internet really wasn't that popular. There were no memes. But if I had been 20 years old now, I absolutely would be all about meme stocks. I would have done AMC. I would have bought Dogecoin. I would have just been letting it rip. And I probably would have lost a ton of money. Not unlike how I lost a ton of money investing in individual stocks when I was in my 20s. So is it good that we are becoming more aware and interested in investing? 1,000%. I think that we talk a lot about how financial literacy or financial awareness or all these things are necessary and needed, but like everything else, there's a double-edged sword of the other side of the coin, which is people are probably going to lose money.
And that's, I think, that can leave a very, very bad taste in someone's mouth. I think about 2008, what we all went through, and I think it was the millennial generation really went into that, kind of came out of the college, went into workforce, and that really drives a lot of their view around, saving and career and investing. But here we go, this newer generation, and look, I'm like you, I want people to be engaged. I think you need to learn financial skill, but at the same time, a little discouraged over how we've turned this transacting and investing into almost a game. Good in one way, but bad in another sense.
Yeah, certainly. You look at different incentives for things. Incentives are wonderful if they, cause positive, constructive behaviors, and then they're bad if they cause negative behaviors. So there's a lot going on there. Certainly, we all, I think, recognize that social media is playing more of a negative role in our lives because they figured out how our brains work and how to get us to engage and have more activity on the platforms. And so if there's a platform that is encouraging us to trade more and increase activity by taking advantage and manipulating us, then I think that's nothing but a bad thing. And the danger and risk of a young person being 25 years old and going through the 2008 financial collapse, will that stop them from wanting to invest? Potentially. Or will they recognize that it's an anomaly, or will they learn from it and move forward? We certainly don't have the answer to that question, but a big part of our work, Jeff, is going back to when we were 5 years old and to try to figure out what impact life events had on us and how that's translating to future behavior. So I totally get it. And it's all things that we need to be talking more about. And with any kind of new technology, there's going to be bumps in the road as we sort of figure it out as a collective amount of people. How do we really want to interact with this if we do? And what changes do we need to make?
Let's talk a little bit about the 401k industry or the retirement industry. And George, I am sadly to say old enough to remember when things were not daily valued. Back when I first started in record keeping, things were quarterly valued, semi-annually valued, and so trades were made once a quarter or semi-annually. Fast forward to today, things are daily traded a lot of times because you strike that NAV. Most plans do not have ETFs. And look, we dealt with, I think it was 2002. Sorry for going on here, but just to set up the question, 2002, we had a lot of foreign trading, right? So there were foreign stocks. People would watch what happened in foreign exchanges, and then they would trade in their plans, knowing what happened in foreign markets that day. Fast forward to today, now there's just a focus on can you time the market, and I think we've all learned through bad results that you just cannot time the market, and this is what this TikTok financial advice has me really nervous.
Yeah, that's such a tricky one. I had a conversation with a really smart person some time ago, and I was talking about how I lost money in individual stocks when I was a younger person, and will probably continue doing that. And he referred to that experience as your tuition. And so at some level, everybody, even though we know intellectually that we're not really supposed to be trying to time the market, we all need to go through that. And that is, in fact, your tuition, your personal experience, learning that there are two sides to every single trade. So if you think you're getting a great deal, somebody else thinks that they're getting a great deal as well. And the thing about being successful as an active trader is you have to be right twice, not just one time. So you have to be right at the price that you buy at, and you have to be right at the price you sell at. And to your point, Jeff, Warren Buffett famously said, it's time in the market, not timing the market.
Well said. And I think here's a myth that I want to just say to you and to the audience. I'm going to read it from a story in Yahoo Finance. Anyone can teach themselves how to day trade and be successful at it. And I think at face value, George, it's a true statement. You can teach yourself how to be a good day trader. You can buy books. You can watch videos on YouTube and TikTok and Instagram. But the reality, to your point, George, it's experience. It's knowing whether you are a functional or a traditional trader where you look at the analytics or you look at different patterns, right? I forget the naming of that. But regardless, right, that is really a myth. Most people, 99.9% of people, will not be successful as day traders.
Yeah, that's the whole active passive conversation or debate, whatever you want to call that. You look back over 20, 25 years, and something like 75 or 80% of active managers fail to outperform the market. So is it possible to outperform the market? Yes, it is. But it's possible, is it possible for me to be an NFL athlete? Well, theoretically speaking, that is a possibility. Is it realistic? Well, no, it's not. So are there people that are NFL athletes? Yes. Are there people that outperform the market and are successful traders? Yes. But can everybody do it? Yeah, to your point, I think it is available to everyone, but do not enter into this lightly. It is maybe not a full-time job, but it requires immense learning and discipline and having systems and structures and following the strategy that you choose. And if you make a decision to do that, well, then by all means, I do think that there are opportunities to do it, but you're right. It is a bit of a myth.
Here's another one, George, I want you to talk about. You can turn $56,000 into $1 million in 11 years. There's something, George, called compound interest, but there's also something called the rate of return. And the rate of return to turn 56,000 into $1 million, pretty significant given what's happening in the market today is when you're only investing in traditional asset classes. Your thoughts on that?
Yeah, those are really, really specific numbers. 56,000. I think you said 11 years, and then the million is.
I mean,
it's just a really nice.
Apparently, it was something that someone talked about on TikTok, but it's just so wrong, and you're not even taking into account fees. It just gets me. Oh man, it just makes me concerned.
It's fascinating to be watching this play out in real time with people on the internet and everywhere else talking about financial stuff. I wonder, I'm sure that there are people who are believing that is accurate, and even perhaps more dangerous is then taking that information and applying it. I guess fundamentally, there's nothing wrong with the idea of investing $56,000 a year for 11 years and hey, let the chips fall where they may. I don't necessarily think that that's the most dangerous thing, but is it accurate? Probably there are more details to be considered.
Yeah. George, I need to take a quick break. When we come back, we'll talk more about TikTok, social media, and education, and how important it is to make sure that you invest appropriately for yourself and your family. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to George Grombacher of Money Alignment Academy. George, thanks so much for staying with us this morning.
Glad to still be here.
Yeah, and great to have you. And we're trying to, I don't know if dispel myths is the right word here. We're not trying to bust anyone's bubble. I think what we're trying to do is make sure that people are armed with the right information. Let's talk about educating yourself. I want to start with misinformation, disinformation. How do you vet what you see online? I'm not talking about politics, I'm not talking about current events, I'm talking specifically about personal finance and things that TikTokers and Instagrammers are doing.
Yeah, I'm reticent to yuck anybody's yum, right? If people love consuming TikTok, and it makes me wonder, Jeff, should we be doing TikTok? I don't know if you're on TikTok. I'm not. I feel like I'm an okay dancer. But how do you know if information that you are receiving is correct? I mean, there's so much that is going into that question, and it's such an important question to be asking, particularly today, but being a good consumer of information. I think that number one is checking your source. So that doesn't mean that if information is coming from the most reputable newspaper in the world, that doesn't mean that you should just take that at face value either. So if it's George on TikTok talking about getting a 25% rate of return every year guaranteed, or if it's an article in a New York newspaper I think that you need to say, okay, what are the incentives from the person who is putting this content out? What is the background? What is their credibility? Is there a level of expertise? And can I verify or validate that this is in fact true information? So making sure that you're checking the source, and then also check yourself. Think about, okay, this is really striking a nerve with me as the listener or the reader. Why is that? What am I walking into this with? I have biases. I have past and previous experience. So if it's me consuming financial information, or if it's me consuming any kind of information, I also need to look at myself and say, why do I think that this is accurate? And is it possible that the opposite of what I believe could also be true?
Yeah, you bring up a really good point. And, in the world of social media, things, you're flipping by, and also we're doing a lot of talking with our friends who may not be experts in a particular field, but I think you're spot on. Looking at the source, validating that source to make sure where they're coming from, and also trying to figure out their motivation. Now, it's really hard, George, to do this in the world of social media, because oftentimes you have to leave social media to go out to the internet, your browser, to find out who, or LinkedIn to find out who that person is. But I think you're spot on, making sure that you understand who that person is, their background, their bona fides, and also what their incentive is. Are they selling a book? Are they making money off of a trade? Are they or sponsored by somebody in particular?
Yeah, and I also don't want to begrudge anybody for trying to make a buck, but I'm not interested in having just anybody make a buck off of me, or people that I care for, or consumers who are trying to be financially successful. The stuff that's coming across my social media is probably because it is popular, because it's entertaining, or it's salacious, or it's some kind of a hot take. Just really sound financial advice, probably not going to bubble its way to the top of TikTok. So also just understanding that the algorithm is serving me up stuff that is interesting to watch, or triggering to watch, or surprising to watch. They're very, very, very good at this.
George, as I mentioned in our first segment, I spoke with a compliance expert, Dave Banerjee, that said that the Securities and Exchange Commission's looking into this, looking into things like Robinhood, meme stock investing. There's a role for regulation, and there's a role for market making. I want to get your perspective. I mean, you're talking with retirement plans, employers that sponsor retirement plans, and other benefits. What's the role here for regulation? Can you protect everybody from themselves?
That's a really good question. So let's start with the first part. What's the role of regulation? That makes for an efficient, I don't know if that's the right term or not. It makes for a marketplace where we can engage in that marketplace with an element of trust, understanding that the players on either side have been vetted. So talking about new fintech companies and opportunities, if it's the Robinhoods of the world, or if it's blockchain, or if it's crypto assets, I think that the more those things can embrace regulation, then the faster they're going to actually get rolled into the marketplace, or but as I say that, they may just not be interested in participating in the traditional marketplace. So the role of regulation, it's been there for a long time. We need to have rules of the game, and the players can either choose to play by those rules or to not play by those rules. I forgot the second half of your question.
Well, I guess, let me just take it a step further, because we're kind of almost coming up on time. But I want to talk about what it takes for Money Alignment Academy. You produce content for your clients. This isn't something, look, you're really good. You don't give yourself enough credit. You're really good at creating content, podcasting, doing videos. But how long does it take you to go through the process of creating a video, creating information, getting it vetted by compliance, right? That's an important part. Creating content for Money Alignment Academy takes a bit of time, I would imagine.
1,000%. Yes, certainly. I've literally been doing this for just over 20 years now, so it gets easier because I understand what is acceptable and what is not acceptable, what's proper and what's improper. So, but yes, it certainly does take time and it takes effort to make sure that you're getting things right. So when you have folks out there that have taken very little time or effort and have very little expertise, then it's, I guess, to a degree, it's not necessarily fair. It's also not just, and it's not a good practice, which is why I suppose the SEC is taking a closer look.
Yeah, I mean, I think it's about market making, market protection, and education, as always. Well, George, we did not do enough justice to this topic, but I think we gave people some things to think about. George Grumbacher, it's always a pleasure chatting with you, and want to wish you a great rest of your week, and we'll talk to you again very soon.
Thanks, Jeff.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement, markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.